Welcome back, my awesome people. Today, I am joined by another amazing guest. I have Mike Loukas, the CEO of Trueshares. Now, Mike has revolutionized the ETF industry, especially with a new strategy that I have actually never had on my channel, which is called the Uncapped Buffer strategy. I could be totally saying it wrong, but Mike will give us all the details. He'll give us the ins and outs. So, to get right into it, Mike, how are you doing today? Thank you for being here with me.
Yeah, I'm well, Jacob. Thanks for having me. Pleasure to be here.
I totally appreciate it. You know, it is the weekend is coming up. It's a busy time, and plus third quarter is around the corner for many companies. So let's just get right into it. So Mike, before we get into Trueshares ETFs, especially one of my favorites like LRNZ, which focuses on AI and deep learning. Can you just tell us about yourself, how you got into finance, maybe some of the core mission of Trueshares and an overview of you finding it?
Yeah, absolutely. So I know I don't look like it, Jacob, but I've been in the business for over 30 plus years now. And, it's been an interesting ride. I got in the mid to late 90s. I got into the financial business, and I started out way back in the day as what you would probably just call a stockbroker, right? Back at a company called Dean Witter. And Dean Witter got bought by Morgan Stanley, and then I moved on to a different company, and a different company after that. But my journey in the financial business has been one of not only different investment approaches and different sides of the business, but also different product types, right? And that'll lead us into why Trueshares even exists, is that there are lots of different investment approaches in the world, right? There are different investment approaches for each investor out there, each advisor or planner or hedge fund manager, you name it. Everybody has an approach that they prefer. Some are successful at it, some are less successful at it. But the other component that really matters here is the product wrapper. And so I've dealt with wrappers from REITs to mutual funds to annuities to ETFs. And one thing that has always prevailed is, by and large, people want to make money, right? And then the other thing they want to do is they want to protect the money. And so when we started Trueshares, we wanted to get into the ETF space because we see the ETF space as inevitably what's going to replace the mutual fund. It already has started to happen. But what's going to replace the mutual fund is probably the most common investment vehicle for the everyday investor. And the ETF has some distinct advantages to it when it comes to what we call the shell or the wrapper, in terms of tax efficiency and liquidity and that sort of thing. But it also is really dynamic and versatile because it allows a multitude of different investment strategies to exist within that shell. And for us, we wanted to be in a space where we could utilize the ETF format, the ETF shell, and we could introduce different strategies to the investment marketplace that act as more solutions than anything else. We're not going out there and we're not just going to try and buy large cap equities and beat, the S&P 500, right? And it's really hard to do that. But what we can do is we can provide components or solutions that can be utilized within a portfolio, a holistic view of a portfolio that can accomplish very specific goals for an investor. And holistically, maybe that portfolio can outperform the market, or if this is their intent, maybe it can gain some growth while mitigating risk. And that's a big theme we have today. So Trueshares really has focused on that, providing what we call portfolio solutions so that investors can achieve whatever their investment objective is, and also try and address or minimize the risk in the portfolio as well. So we try to do two of those things at once in most cases. And that really is the theme in our product line. And I think these days with, the volatility you see out there and the different macro factors, right? Whether it be tariffs or geopolitical events or elections. Lots of things can push the market in different directions. And we've found in the last 5 to 10 years that one of the most important things for investors is not just growing their capital, but allowing them to sleep at night. Because if you try and keep track of all these different variables that can push the market in one way or another, it becomes a full-time job. And it also becomes a very, at times, stressful and unsettling task. And so we try to smooth that ride the best we can. But that's what Trueshares is really all about, providing those portfolio solutions so that investors, regardless of what their objective is, can find a way to try and achieve that objective without corrupting what we call the risk profile or the downside protections of that portfolio.
Mike, that is the best way of putting it because especially with all the macro and micro economics going on in the world, as you said, right, tariffs, it's on pause. It's going back and forth. It's like ping pong at this point.
Right.
And, everybody's trying to look for a safe haven. At this point, I believe that a lot of companies are trying to create ETFs to help their investors shelter, not only for tax purposes, but also volatility. I remember about 15, 20 years ago, I may not look it, but ETFs were not spoken as much compared to single stock or mutual bonds and so on. I would say in the past maybe 10 years or so, ETFs have exploded, especially with SPACs, especially with retail investors like myself, being able to go on Robinhood or Wealthsimple and just buy things. And also, many of us are now concerned as we get older about those tax implications. So like I'm in Canada. So here in Canada, we have the TFSA, the tax-free savings account. And I know in the United States, they have the Roth IRA. So those vehicles are definitely meant for ETFs. And so one of your main strategies that, as I said earlier, we have never covered on this channel, and it's new to me, and I'm sure it's new to many of my viewers, is the uncapped buffer style ETF. Can you tell us more about this strategy and just in simple terms, and how does this type of ETF work?
Yeah. So the basis of that ETF, Jacob, is, everybody's heard a lot about the buffered space. And the buffered space seeks to sort of minimize your downside risk. And so the uncapped buffered approach, which we revolutionized. We were the first ones to offer it in the marketplace almost 5 years ago. And so the uncapped buffered approach that Trueshares follows is meant to do two things in one strategy. The first is just like the other buffered strategies, we're going to give you a buffer on the downside, right? But the other part of this is that we truly believe that if you look at volatility, and you look at what we call the left tail, which is the downside volatility, and the right tail, which is the upside volatility, they're both very meaningful. And I say that because the left tail, yes, we all would like to truncate that tail. We'd like to minimize that tail, that downside risk. But in doing so, because when you do that, there's no free lunch in hedging, right? So you have to make a trade-off. In most approaches, including in the buffered space, that trade-off is they cap your upside, right? So they take the right tail and they cap that, and the left tail and they buffer that. And so we look at it and we say, well, here's the thing. If you're buying one of these products that's based on an equity index, you're theoretically doing it because you still need growth in your portfolio. You want the growth characteristics of equities. So if we cap the upside, we're removing some of the growth potential of those equities. And so for us, the idea is, look, yes, we agree. Let's try and limit the downside to the extent possible. But then we can make a different trade-off on the upside. And that different trade-off is, let's go uncapped. And uncapped means that you wouldn't believe, if I showed you the stats, you wouldn't believe it, but roughly a third of the time, if you look at 12-month rolling returns over the past 40-ish years, roughly a third of the time in that 12-month period, the large cap US equity market goes up. It goes up double digits. And it averages in the 20s, call it like anywhere from 23 to 26 when it has those big up years. Now, those big up years are really important because things like the tax-free accounts and other types of savings accounts where the investment outlook is long-term, they depend on compounded returns, right? The compounded returns are really where you get that growth. Now, compounded returns, they work really well if you avoid the downside. They work even better if you avoid the downside and capture as much of the upside as you can. So what the uncapped buffered ETF does is it accomplishes those two goals in one strategy. So when you have those big up years, when you have 24% up year in US large cap equities, for example, you will get a participation ratio as opposed to a 1-to-1 to a cap. And what that means, let us give you a real straight numbers example. If the market is up 10 and one of the Trueshares uncapped buffered ETFs, is what you own, and it has an 80 to an 85% upside capture or participation ratio. Mathematically, the market's up 10, and that product's going to be up somewhere between 8 and 8.5%. Now, most people don't get angry if they trail the market by 1 to 1.5%. If the market's up 25% and the capped buffered ETF caps you out at 16 or 17%, but an 80 to 85% capture ratio is going to give you 20+%. That's getting different, right? So then you're talking about a meaningful amount, 4, 5, 6%. And what that does over time is it increases the ability for your portfolio to compound its returns. So long story short, what we introduced to the market 5 years ago was the idea that we are okay with losing to the market by a little bit in what we'll call a trending market. What we really care about is a market that rips up and has a big chunky return. And we want to capture as much of that chunky return as we can because we think that's just as important as minimizing your downside exposure. And we do that too, right? So again, it's those two components. Minimize the downside just like every other buffered ETF. But on the upside, we want to capture as much of those big chunky up years as we can because they are super meaningful to the compounded returns of a portfolio, particularly for someone that's investing for the long term. And that's the basis behind the uncapped buffered ETF. We want to take all that's good about a buffered ETF, but then we want to adjust that right side or right tail volatility so that we capture more of it. That's the good stuff. And we want to capture as much of that good stuff as we can while still minimizing some of the bad stuff.
That strategy, as you were saying it to me, it totally felt like alien technology, alien language. But I know for a fact that it is actually less complex as, we may seem, because if you do have a long horizon, that means you have a higher risk tolerance. And so, for example, as you said with the buffered, you might not get that volatility danger, but you also are not able to capture that upside potential. Whereas someone who's willing to wait 10, 15, 20 years, just as if you were investing in the S&P, you're getting both ends. You're minimizing or mitigating the volatility while at the same time trying to capture as much potential as you can. And I think with young investors, retail investors, I think this is the way to go because most ETFs, from what I've realized, because I love my ETFs as well, is because they might be paying a lot of high dividend or some type of dividend, it's being capped of the growth potential. And so I think with the uncapped buffer, you're getting both positives. And so just to stay with that, with your ETF suite at Trueshares, before we get into your ETFs, but the ones that stood out to me were the DIVZ and the IDIVZ because I did interview Austin Graff a few months ago.
Yeah,
so
right.
Yeah,
Yeah.
cool person. We
Yeah.
had a really good conversation. But for Trueshares, can you tell us more about LRNZ? Because, AI, deep learning, recently Musk just kind of, left the White House a little bit and is going right back into Tesla. And hopefully we'll get those share prices back up. But can you tell us more about LRNZ and how is the uncapped strategy working for it?
Yeah. So LRNZ, first and foremost, Austin is a super talented guy, and we love him. And iDivs and DivZ are great funds, and they, by and large, accomplish what they set out to do. So certainly great ones to follow and or take a look at. Learns is a different animal, right? LRNZ is a little bit of a different animal, and that's what we call a pure alpha seeker. So Learns is a concentrated portfolio. It only holds 20, 21 names in it. And when you are a long only investor in a growth sector like AI, generally speaking, you want a more concentrated portfolio, at least in our opinion, because it's hard to beat the market when you own the market, right? You've got to take active share. And so a concentrated portfolio has a better chance of outperforming the market because it isn't the market, right? If you hold 150, 160 names in a portfolio, you're basically getting the market, right? And that's when you just go buy your Qs and buy your index funds. But when you have a fundamentally driven portfolio that holds 20 names, 21 names, a concentrated number of equities, you can really drill down on the themes that you want to own, and you put it right next to your broader market product, right? And so this product is meant to drive alpha or outperformance versus its market. AI, Jacob, it's inevitable. It's just inevitable. And we've talked about it for years. And it starts out with what we would usually call pick and shovel investing, right? The building blocks of AI, which are the processors, the data providers, the algorithms, and then certainly the chip makers, right? So those are kind of the pick and shovel, or the foundational building blocks of the AI space. Now, AI, no pun intended, the space is evolving, right? Just like AI is. The use cases for AI evolve, the capabilities and the applications for AI evolve, and you need to keep up with that aspect of it as well. So what Learns as a really smart person at the helm. I mean, really smart. I've learned one thing in 30 plus years. If I surround myself with smart people, then I can get smarter by osmosis, and I need it a lot more than they do. So, you've got a really smart guy. He's got 2 engineering degrees, one from MIT, one from BU, and has worked in the defense space and worked in sort of the AI and system space for a long time before he got into the investing world. His philosophy is, yes, we want to own the pick and shovel companies. We want to own the chip makers. We want to own, the data providers. We want to own some of these, pick and shovels. But at the same time, where the real benefits of AI can be felt in a business model is by owning what we call the sophisticated users of AI. And so a sophisticated user of AI is a company that utilizes a certain AI application to solve a pain point in a specific industry. And that sounds really broad, but what essentially it means is somebody in the space, and let's take cybersecurity, for example. So cybersecurity is an industry unto itself. There are a lot of cybersecurity providers out there. They go about it different ways. Somewhere in that category, there's going to be what we call a category killer. And that's the company that eventually is going to be the household name in that category and is going to dominate that category. So for us in the AI space, we want to find the category killers that are utilizing AI to a competitive advantage. So we still want to own the NVIDIAs and the AMDs and the chip makers, and we want to own the data providers, and we want to own maybe not as many of the algorithm providers because that's kind of open source. But certainly you want to own all the building blocks. But then you want to own the companies that have taken all that and they have created an AI application that gives them a competitive advantage in an industry. And that competitive advantage, with a proper business model wrapped around it, can become a juggernaut, right? That is a category killer. And that's what we look for. And that's what we try and own in Learns. And so if you look in Learns, we'll have everything from biotech and healthcare companies to cybersecurity companies to logistics management companies. You name it, we've got a variety of it in Learns, but everything in there is a company in a given industry that has a chance to be a category killer because they're utilizing AI to solve a pain point in their industry. And that's a really broad brush way of saying, for us, the next level of AI investing is going to be owning the companies that apply AI to such a competitive advantage that they become a category killer and a household name and a winner for the next 10 or 20 years.
That was a very well put way of pretty
Thank
much
you.
summing up what AI is currently doing and going to be doing, because I totally agree with you. When I buy ETFs, I don't look for the ETFs that are holding 200 companies or 150 companies. Just give me the top players, give me the top 20, the top 30,
Exactly.
because chances of them failing, yeah, they might have their low days, their low cycles, but chances of them failing because they're if they haven't yet, but are going to be household names, are very, very slim. Like I know Nvidia just less than 10 years ago, it wasn't a household name, but now every console, every almost anything related to a chip, especially with their quantum chip that they recently came out with, now requires that Nvidia technology. Same with, of course,
Exactly.
Google, Microsoft, and so on. So I did see the holdings of Learns, and it is phenomenal. And so what would you say in this current investing, I guess, world that we're in, with everything, in chaos? What is the biggest challenges in ETFs? Because there's a lot of ETFs, there's a wide range of different strategies used, different companies. But what would you say is kind of maybe one or two of the major challenges that ETFs are facing in general?
Well, I think that as with any proliferation in an asset class or with a product class like an ETF, the broader the ETF universe grows, the more strategies end up in ETFs. And I'll say two things. One, I call it ticker soup, right? There used to be a manageable number of ETFs out there. Now there's an astronomical number of ETFs out there. So, how do you wade through that and understand what you're buying and how it fits what your particular investment objective is? That's problem A. Problem B is making sure that investors are educated on the investment objectives and the holdings of each of these ETFs. And then lastly, I think, there's the capital markets side of ETFs. So helping investors and understand different things like tax efficiencies of ETFs or liquidity provisions in ETFs, because they function very differently than mutual funds, for example. Very different than a lot of products, a lot of product structures. So it's really around the education for me. So investing is always this, right? It's matching the investment strategy with the investment objective of a portfolio. And that's true of any product, any structure. And the same is true of ETFs. So we just got to go a little bit farther with the education and making sure investors are matching up their investment objectives with the portfolio tools, which are the ETFs. Make sure they're doing that efficiently. Make sure they understand that just because an ETF may have only traded 5,000 or 10,000 shares in a day doesn't mean that they couldn't buy 30,000 shares without the price really moving, because it trades differently than a stock and certainly differently than a mutual fund. So understanding all that, but in the end, the fundamental tenets remain the same.
It's
And
a
we'll
very
go,
Yeah,
yeah,
and I was just gonna say you're absolutely correct, and it is very true. Education should be pushed more when it comes to investing, because Many people just invest based on, what their coworker says, what their neighbor says, what they saw on
Yeah.
television, whatever TikTok mentioned. So, and unfortunately, then they get turned off from investing because maybe they lost a whole bunch of money. But just to kind of go back to our AI conversation, I just wanted to
Mhm.
make a point where, you're absolutely right when it comes to AI, because AI is kind of like the dot-com bubble that is coming up, right? Nobody knows
Yeah.
who the winners are. Nobody knows, out of these thousands of companies, who's going to be here in the next 20 years or 10 years. And so being concentrated is accurate, but also, it's a cool point that you mentioned is the infrastructure. You're right. You're selling the shovel, not trying to find the gold or dig the gold. And I think that's where AI is going, because of not only the energy consumption, but just the data
Mhm.
centers, I think I heard at one point they have data centers now underwater because they needed to
Yeah.
stay cold.
Yep.
And I think
Yep.
there's going to be so many industries being affected by that. What do you think about AI as a whole when it comes to, for example, healthcare, industrial, and so on? What are your thoughts on that?
I think it's an amazing shift in society. I think that it's going to permeate all of our daily lives to a certain extent. I mean, if you look even like the data centers you're talking about, there was a stat I saw in the last, let's call it 6 months, but we talk a lot about the energy used for data centers. AI actually was able to reduce the amount of energy needed for the data centers by something like 30 to 40%. Right? So it's you've got all these weird little moments where you're like, wait, AI is cultivating its own beneficial environment. And it gets into one of those really trippy sort of hypotheticals. But the chance for AI to create, and I'm going to sound really hokey here for a second, Jacob, but the chance for AI to create a better world is real. The chance for AI to go off the rails at something and become a sci-fi movie, maybe that's real too. But
We have to take the
the
good and the bad, right?
I mean, that's on us to try and own that, right? But the benefits that it has, the things that it can do, because it just on no level can we replicate what AI can do, even right now, never mind what it looks like in 5 years. We just can't replicate it with human intervention. And so it has the ability to create things that we only thought would happen in sci-fi movies, right? It has the ability to create energy efficiencies. It has the ability to create new drugs, right? And new ways of treating disease. It has the ability to potentially solve problems for us, whether it be like creating food sources. Like, so any part of life you can look at and say, man, we've been trying to figure this problem out for hundreds of years or thousands of years or 10 years. The idea that AI can play a role in finally solving that is not far-fetched. And I think that the next 5 to 10 years, we're going to see an exponential growth in how AI is used and how efficient and effective it is. And yes, that, like we said, comes with we got to put some guardrails around it, some ethical things around it, because people can do some wild things out there, right? When you're not looking. But if we put the right guardrails around it, AI has the chance to change the world and how we live in it, and potentially how we live somewhere else. If you talk to Elon, right? How we can shift what we know as society and the life that we've experienced, and shift that in a whole different gear. And so I for one I again mentioned this. I'm on the older side, so I'm simultaneously mystified and optimistic about AI, because I do think it has the potential to just do some things that I saw in movies when I was a kid.
Terminator
You
2.
know, well, yeah, maybe that, right? Maybe that one,
I
but
I
some of
I
the other ones too, right?
I definitely agree with you. As like I've seen AI work its magic, and it has solved various earthly problems, technological problems, even personal problems, like for example, you're trying to do your taxes, it might take you 4 minutes to find the answer, but you can just type in one sentence and you get it in 2 seconds. So
Yeah.
it has definitely gave us convenience, but as you said, we do need that guardrails because there are some mad scientists out there who are willing to take it all the way there. So I hope it
Yep,
doesn't get
I
that
agree with
far.
that.
So,
I
what do
agree.
you think about AI and investing? Because I know bots right now are, almost every firm is using some type of investing bots to pick their
Mhm.
trades. I know regular traders, retail investors who are using bots to do their daily trades.
Mhm.
How transformative do you think AI will make investing?
That's a really good question, and I've seen the bots do good things in the market. I've seen them do bad things in the market, right? Because there's no subjective decision making with the bots, and so they may trigger a sell at the last point you'd want to do it, right? So because those are the rules that the bot is programmed with. So as an ETF company, we see a lot of strategies. A lot of people come to us and say, listen, I've got this strategy. I'd love to put it in an ETF. Can you help us launch it? And that's not the core business we do. There are other people that do that as a core business called white label providers, right? So that you can customize an ETF and anybody can walk in, write a check, and launch it. We don't do that. We kind of look at them opportunistically. If you look at like a DivZine and iDivs, we've got a great sub advisor on those. Really smart guy, great strategy, one we believe in, and we want to partner with him, build a business around it. So we see a lot of people come into us with strategies that might these days are driven by AI, right? So they come into us and say, we've been running this strategy against the S&P for the last 3 years, and we use only AI, and the algorithm has beaten the market by 3% a year annualized the past 3 years or something like that. So they're out there. There are some really good ones out there. I'm not sure they're all really good ones, but I think that the market is going to see a lot more of those players come in. We don't go that direction, as a company. Maybe someday we will. It's been a little bit of a challenge for the SEC, right, to try and wrap their arms around how to regulate AI driven investment strategies. And so everybody's kind of feeling their way around in the dark right now to figure out what the structure should be, and again what the regulation should be, and what qualifies as generative AI and what just qualifies as a glorified optimizer, which basically sorts through information for you. So there's a lot of variations of it, but I do think there's a wave of actual generative AI driven investment philosophies and or approaches that are starting to show up in the marketplace. And like anything else, time will tell. Um,
Because pretty much it's still a
I
very,
think
very
they,
new concept. So it's
yeah, super new.
very new. I've only heard about bots maybe about 4 months, 5 months ago, and it
Yeah,
was from a person who was reselling sneakers, where he was telling me he's using bots to buy sneakers, but at the same time also do his trades. So that
yeah,
was a new world for me. And so,
yeah.
what do you think about, for example, cryptocurrency right now?
Mhm.
5 years ago, 6 years ago, institutions were staying away from it, not even touching it. Just recently, last year, they came out with the Bitcoin ETF, the spot Bitcoin ETF by BlackRock. And now institutions are jumping in with new coins coming out as well.
Mhm.
What does Trueshares say about that? Maybe one day a crypto ETF, maybe a Bitcoin ETF. What are your thoughts on that?
Well, I'll give you Mike Lucas's opinion on that one because some people at Trueshares might disagree with this one. But um, look, I think there are two questions for me: is crypto real? Is it a valid investment? The short answer is yes. Of course it is, because it's accessible. It has a valuation. It has a market, liquid market. Custody is a little wonky, right? Because you've got to have cold storage and some other aspects to it. Now, saying it's a valid investment and saying that it's a vehicle that can be traded and you can make or lose money on it is a heck of a lot different than saying it will be institutionalized and accepted as a currency. So for me, that's where I diverge with a lot of the crowd. I talk to the crypto folks and I say, have at it, make all the money you can. If you can make money on it, make money on it. And I would say the same thing to you about gold, or the same thing to you about any other commodity. But to me, we are light years away, because I don't think we're ever going to get there, for these cryptocurrencies being a sovereign conveyance of value. And what I mean by that is, I think that the governments that comprise the reserve basket currencies, right? Sort of the most accepted use currencies in the world, of which the US dollar is obviously the most established. I think they're all going to launch their own digital currency. So I think you'll see a digital dollar a heck of a long before you'll see someone like the US government say, we're going to make Bitcoin a currency in the reserve basket. I just don't see that leap, because there's a lot of things to discuss with this, right? I get the DeFi aspect of cryptocurrency, but I also get that most governments on this planet function on taxes. And being able to track that financial network for a variety of reasons is of a huge benefit to some of the biggest governments on the planet. So I just don't see them offering up a totally decentralized currency that will take the place of the one that funds everything they do. So to me, that's where the things diverge. Is it real? I mean, look, I'm in San Francisco. I've been watching this for years and years, and I've been here for 25 years. So yeah, it's real. People make a lot of money on it. People lose money on it. You can't lose money on crypto. I mean, I guess people don't remember that sometimes, but
Yeah.
I wish they would approach stocks the same way they approach crypto sometimes, right? If it's down, buy more of it and hold it and see what happens. But I do think there's a little bit of a chasm between cryptocurrency being an investment, a legitimized investment, and it being a sovereign conveyance of value. I think that governments will eventually launch their own digital currency. And then what? Right? And then what is Bitcoin, for example, other than gold, right?
And that's the and you've nailed it right on the head. The sentiment that Bitcoin is going to be adopted by the government, in my personal opinion, is never going to happen, because is the decentralization aspect. The government needs to track where the money is going. It needs to obviously collect taxes. So if it's decentralized, it's just going to be invisible money going back and forth without any accountability. So I think definitely governments will not. Like, I know some foreign governments have kind of started already using it, but the powerhouses are probably going to create their own digital dollar, or their own. I think there was one, I think they call it CBDC. I don't know, maybe I'm wrong about that, but okay, well, that's a very good point, and I think many of my viewers also share that sentiment as well. And so what do you think about, I know this whole talk about recession this, recession that, markets going down a little bit, crypto's going up, where do you think the S&P or the Dow or the stock market as a whole will be going towards the end of 2025, early 2026? A lot of people are saying the recession is going to hit 2026, because right now everything is being propped up by somehow some printing. And so what are your thoughts on, the second half of 25, first half of 26?
So let's separate a potential recession from the stock market for a second, right? So will there be? I don't think there will be. I don't think there's going to be a recession. I think that the economy is likely going to be strengthening. I know that everybody's pretty worried about the tariffs and some of the geopolitical stuff going on. Tariffs are an interesting thing. And if they're used as a lever, they can lead to greatly improved economic environments. If they're used unwisely and used as a hammer, then they can be troublesome. So far, my interpretation is they're being used as a lever. Now that may change because every day brings something new in these parts. But so I do think we're in a decent spot from an economic standpoint. I don't think we're going to be entering a recession. Again, personal opinion, and I do think we'll resume acceptable levels of economic growth by the end of 2025 into 2026. Now, when it comes to the stock market and those sorts of things, the funny thing about the consumer, which drives a lot of this talk of recession, they're awfully resilient. And we do know right now that there's something like $5 trillion in money market funds or the equivalent. That's going to go somewhere. I've heard estimates say 3 trillion of that is expected to be put back into the market over the next couple of years. That's a heck of a tailwind. That is a heck of
going
a
to be
tailwind.
crazy.
Yeah. So people underestimate two things. One, how much cash is on the sidelines. And two, how resilient the consumer is. Like I saw something recently that the survey was if an iPhone costs $200 more than it does now, would that affect your decision on buying an iPhone? And something like 70+% of the respondents said no, it wouldn't affect it at all. And I get that, and I feel that. Now, does it, if you've got grocery prices, gas prices, all, sort of staples, staples that are needed for daily life, those are getting high up there, that's what I think can be the pain point. But when it comes to the tariffs, and are people going to stop buying things because they cost a little more? Would they struggle a little more if food costs too much, or fuel costs too much, or rent or housing or mortgages? Yeah, those can be problematic things. And that's what I would look at. But in terms of the actual consumer, the consumption, man, is it resilient,
I agree. I think the consumers are very resilient because out here in Canada, the tariffs haven't hit us as crazy as the media has made it seem. But then again, a lot of us are waiting to be the 51st state. So who knows? We're just waiting for that big decision to come down from the top. But how is the United States going right now? Because a lot of Canadians are not going over. But what is the consumer sentiment in the United States?
It depends, just like it always does in the U.S., depends on what region you're in, So it's a big country, a lot of people, a lot of differing opinions. I think right now consumption is still really strong. In what I do, I travel the country quite a bit, and I do see differences from city to city. I see differences in what they're willing to pay for example. Like if you're in Manhattan, if you're in New York, someone's going to pay $20 for a cocktail. If you're in Lawrence, Kansas, that's not happening. But people will spend on a relative basis for what they think is a worthwhile, spend or worthwhile,
So they're willing to spend. They're just kind of playing it a little bit smarter this time around and not just throwing their money around.
Americans, at our core, we're what I'll call histrionic a little bit, right? We can be a little melodramatic, which could be really great when it comes to certain things and really detrimental when it comes to other things. And so you'll hear a lot of overblown talk about how people hate this or hate that, or people just stay up all night thinking about one thing or another. By and large, it's like any place else. Most of your population is just trying to get through the day, collect a paycheck, eat dinner, pay their rent or their mortgage, and keep moving. Um,
And all this
you
loud
know,
noise isn't something that they're focusing on.
no, I don't think anyone truly thinks Canada is going to be the 51st state.
It's just a nice little meme and jokes that we always throw around these days. It's still in our media though. It's still being in our media every other day. Will we be the 51st? Will we, of course it's the media, right?
It's funny, yeah. It is funny, and look, and I have a lot. I grew up as a hockey player, right? So I have a lot of Canadian friends, and I talked to some of them. They're like, "Yeah, cool, take us, we'll do it." And some of them are just like, "Absolutely not," And you get the same thing down here about every other topic too. So you're just gonna, And so there's just a lot of rhetoric, a lot of noise out there, and I think when you strip all that away, people are still going out there and they're spending and they're buying cars and they're going out to dinner, they're
Yeah.
buying clothes, and most importantly, the huge chunk of this country, and I can't speak for Canada, but I would imagine it's the same way. Most of us are just trying to make a living, take care of our families, put food on the table, and pay the rent, right?
That's all it
Um,
really is. Just not only surviving, but just living. We're not,
yeah,
we're at this point, especially what's been happening in the past 10, 15, 20 years, we're kind of desensitized to all the loud noise in the media. We're just like, oh, not another one. And then we just
yeah,
continue moving on. But no, thank you for that analysis of what's going on in the United States, because we only get so much. We don't really get as much as we should. So going back to Trueshares, are there any new themes or products or suites or ETFs? You don't have to say it if it hasn't been announced yet, but is there anything that's coming up maybe in the near future?
we've got a few in the pipeline which I can't talk about. There is one that's in registration right now, so there's a live link to the draft prospectus, if you will. But it's more volatility management type stuff, right? So you're going to see a similar theme from us, which is how do we capture upside and mitigate downside? How do we capture an uncapped level of upside, mitigate downside? So one of the ones we have in registration kind of does that. It's really focused on um, not buffer. It's not a buffer, right? But it's a reduced exposure. So it's really focused on using options to create a payoff profile where you only have, call it, don't hold me to these numbers. I'm just throwing them out there as a hypothetical. But say you had 50% downside exposure. So the market's down 10, you're down 5. Market's down 25, you're down 12 and a half, all the way down, right? Market's down 100, you're down 50. But having the ability on the upside, where you have a hurdle or some sort of gap, right? So, say from 0 to up 6.5%, you don't get anything. You're flat, right? But from 6.5% on up, we've laddered these options positions so that you have convexity. So the higher the market goes up, the steeper your return curve gets because those options are in the money. And at some point, what we're saying is if you could picture a scenario where you only get 50% of the downside exposure, and say it's the S&P, or call it SPY, so S&P doesn't get mad at me. So say you only have 50% of the downside exposure of SPY, and once SPY is up 15%, you're up 15%. And if SPY's up 20%, you're up more than SPY, but you only get 50% of the downside. The trade-off, because we talked about this earlier, there's no free lunch. Trade-off is from 0 to up 6 or something like that. You're going to be flat. But if that's the case, you'll have your other assets over here, whether it be your indexed annuities or your other sort of investments that give you long only exposure that might get capped out somewhere or that sort of thing. So it's meant as a complement, right? And meant a complement to other things in the portfolio. And I think the reality is it's a pretty cool approach, and it's going to be out there hopefully soon. The prospectus is in registration right now, and that's the concept it'll be pursuing. And we think it'll make a nice complement in people's portfolios, and again, help them take that holistic view where you can still gain meaningful growth while mitigating risk.
I think
Right.
that's the big takeaway, right? That's what every investor is looking forward to: mitigating risk and volatility, and trying to optimize the upside potential. Like,
Yeah.
who would want to have more volatility and less mitigation, right? We're all trying to have that. One side is stopped and one side has unlimited potential. So Mike, no, thank you for that amazing wisdom. Truly, I have never heard of this strategy. My viewers, I'm sure maybe only a few have, but we will definitely have this clipped up, thrown on all the social medias, because I think this is a really cool strategy and many people will start looking into it. So on this channel, we actually just have couple of well, actually three out of the box questions that we usually ask our guests. Has nothing to do with finance. So are you up for it?
Yeah, let's do it.
Okay, so if Trueshares was a person, what kind of personality would it have?
If Trueshares was a person, what kind of personality would it have? I would say it would be like almost like a mullet, right? All business in the front, but a little party in the back, right?
I
Where
love
it's
it.
kind of, it's very business like in the front, but we got some great ideas and some interesting out of the box stuff going on in the background there, and sometimes we let it out of the cage.
You know what? I think that's what all investment should be like, where it's all right. Let's get the serious stuff out of the way while we're still being creative and building something new. All right. Second question: what is the most random app on your phone, or that you have recently downloaded or even deleted because you didn't use it?
This is a big confession. I just downloaded ChatGPT like 5 days ago. So that's not random. That's not random in any way, shape, or form, but it is for me. And I'm terrified I'm going to be addicted to this thing. For me, it's going to replace Google. That's the weird thing about it, right?
It really
Everyone's
will.
going to be going to this thing over Google.
Because on Google, you got to go through websites. This, it's
Yeah,
just instantaneous.
yeah,
It's a game changer. I think you will love it.
yeah.
And then final one: if you weren't in finance or investments, what totally unrelated career would you have gone into? Some have said singing, some have said snorkeling. What career would you have gone into?
I'd be a history teacher.
Nice.
Hmm.
No,
I would
that's
do that.
awesome.
My dad taught high school history for 40 plus years, and I love it. I love it. I learned a ton from him, and and I think that I'm not going to say history repeats itself, but I'm going to say it doesn't repeat itself, but it definitely rhymes. And we need to make sure that people don't forget the history because it has a lot of lessons in it.
I 100% agree with you. It may not repeat, but it will definitely teach us or give us the lessons to kind of battle through the future. Okay, Mike. So before we wrap up, the final question is, what advice would you give a new investor, veteran investor, someone trying to invest? What advice would you give them to kind of maneuver, not only through this current market, but even maybe someone looking to buy the new buffer strategy that they learned about today?
Have a plan. Have a plan. Slow down and have a plan. And that's, see, there's a theory that no plan survives battle, right? So you're always going to tweak what you're doing. You're always going to have adjustments to make, but you need a plan because that plan is going to give you the construct or the parameters that are going to guide your decisions. So when we talk about earlier in the conversation, someone has a long-term investment outlook, that's part of a plan, whether it be retirement or whatever. So their plan calls for long-term investment outlook. So that's my advice is always sit down, and think about what you're doing. Measure twice, cut once. It's not a casino as much as people want to think it is. And you can lose money very quickly in investing. If you do it correctly, you increase your odds of making money, but it's not a sure thing. So have a plan. Have a plan where you have established what your risk tolerance is, what your upside goals are. Maybe you don't need to chase the full market every year. Maybe you just need some of it, and you're more concerned with losing money. So understand what your actual objective is. Come up with a plan. Review that plan periodically and adjust as necessary, but stick to it and make adjustments. And if it ever comes to the point where you got to rip it up and start over, do that. That's fine. But never invest without a plan. Because there's so many things in life you would not do without a plan. And I don't understand why people would treat their money any differently.
Very, very well said. And that was amazing wisdom because as we said earlier, education is key. Make a plan so you don't, evade from it. Investing is real money. And all you, my options traders, the ones that do the 1 minutes every day, all day, we're talking to you. No, we're
Yeah,
not.
yeah.
Okay. So, Mike, thank you. Thank you for sitting down with me today. You have been an amazing host with amazing wisdom. You pretty much taught me a lot of new things. I'm sure you've taught a lot of my audience members some new things, especially with this uncapped buffer strategy. And of course, also your intake on AI and what the future looks like and the infrastructure. I thought that was some really, really cool wisdom. My viewers, this is not the only time that you will see Mike on this channel. Once his new products and suites come out, we will definitely have him on again, talk about it. And for those of you who decide to, you want to give unbuffered cap strategies a shot, please write down in the comments below. We will also have Trueshares and Mike's information in the description box. So make sure you like and you subscribe. Mike, again, thank you for being here with me today. I hope you had a good time. But we will definitely have you on again.
Awesome. It was fantastic, Jacob. Thanks for providing this environment and this outlet for us, and would love to come back.
Definitely. Thank you so much. And my viewers, until the next time, stay ranting.